Hello, welcome back to my network. I'm with Andrew Williams, President and CEO of New Pacific Metals. Andrew, good to be with you again.
Yeah, nice to see you again, Peter.
Obviously, you released the pre-feasibility study on Silver Sand on Wednesday, the 26th. Must have been a mixed emotion day for you, given you released a fantastic pre-feasibility study, and there was a coup coinciding in Bolivia. So, first of all, let's maybe we touch on that, and then we can dive into the into the actual numbers and dive in because I feel like get the elephant out of the room in the room out of the way first, and we can dive into the numbers. So, fortunately, the coup wasn't a success. It was gone before it even started, by the looks of it.
Yeah, no, you're right. And just my initial comment there is you can't make this stuff up. It's like it's not like we plan to release our PFS knowing that this coup is going to happen. It's just that's just the way life goes, and you characterize it as the elephant in the room, and I think it ended up turning out to be more like I don't know a little barking dog or something that at the time was we didn't know what was happening. Like I'll be fully transparent with you when we see the images of what was going on. It was like, okay, priority number one for us as a company is make sure that our people and our property are safe, and we did just that. But then thankfully after a couple hours the situation dissipated, and talking to our team this morning in the country, business is continuing as per usual. So yeah, it seemed like it was, as of right now, much ado about nothing, but certainly something that we took seriously at the time, just again, because safety is our top priority. But it looks like things will continue as per normal, which is a fortunate result from what looked scary initially and certainly garnered a lot of headlines. And I got a number of inbound inquiries yesterday, but yeah, looks like that'll be behind us now.
Good. Okay. And just before we do move on to that, obviously, I think there's an election next year in Bolivia, right? Is it 2025? There's the election.
Yes,
Um,
yes.
Look, just in terms of the political climate there, how does that look? Is the government currently in power polling well? Obviously, yesterday may have changed things, but what's the current political climate in Bolivia, and what are you guys sort of expecting the outcome to be, or what the potential outcomes could be?
Yeah, it's a good question because you see the event yesterday, and was it just some freak out of left field occurrence, or is there a bigger backdrop? And I think I think we can say with a certain degree of confidence that there is a bigger backdrop, just knowing that we are going into an election next year, in the fall of next year. And right now, the current party, the Moss Party, they've ruled the country for almost 20 years on a largely socialist platform, and the country is has found itself in an unsustainable fiscal situation, just given the promises that were made and the social support that has been doled out by this party over the last 10 20 years has reached a point where it's no longer sustainable, and the government is going through what I characterize as an identity crisis in terms of what is the future of the Moss Party when the economic engine within the country isn't sufficient to support the programs that they've promised to all the folks in Bolivia. And so right now, the Moss Party is, there's two gentlemen, the existing president and the former president, that are battling for leadership and control of the Moss Party, and so that's certainly creating some tension. There are some additional pro-business candidates that are also in the mix and might show up in the mix, which I think would be unquestionably good. But when you sort of step back from it all, I think we're glass half full people, and we see the current tension as being symptomatic of a country that needs to reinvest in itself, and in order to improve its difficult fiscal situation currently. And as they've done time and time again over their very long history, spanning hundreds of years, they've typically turned to the mining sector as being that engine of growth. And for us, we're seeing it already with the way they're pulling in development for their lithium resources, which are the largest in the world. We're seeing that the hydrocarbon sector, there's murmurings that they're going to put a call out to new tenders for exploration and production, and then us here in the traditional mining sector as well, having our silver sand project and Kangas project. We think we're very well positioned here for whatever government comes to power in the next election. I think we can say with a reasonable degree of confidence that they're going to be embracing and welcoming companies with projects like ours to really give the country that shot in the arm it needs economically to continue to move itself forward. So I think we look at all this with a glass half full perspective that we're in a good spot here, and the future economically is going to look good for Bolivia. That's our view, and yeah, we'll see what happens.
Good. Okay. Well, like I said, look, if an investment is needed in country, obviously you've provided the economics and the engineering outline for one of those investments. Why don't we just quickly go over those for those who haven't seen the headline numbers? If you've got them on the top of your head, why don't we just quickly run through them, and then we'll run into the actual the engineering side of things.
Yeah. So the highlights from the PFS headline number: $740 million net present value after tax, 37% IRR. This is all at $24 an ounce silver. We've still got that sub 2-year payback period on the capital. There's a nice front end loaded production profile at the Silver Sand project that we highlighted in the PEA, that it was largely intact for the PFS. So very strong financeability, and we like to cite the NPV to capex ratio to show the efficiency of the upfront investment at over 2 to 1. Still screening as one of the most capital efficient projects undeveloped in our industry today. So we're very proud of the result of this study. And you look at, there's a lot of discoveries that are made globally, and as you pass them off from the engineer or from the geologist to the engineer, they get beaten down and whittled away to very little. But we're very proud to say that we threw it through the gauntlet for the pre-feasibility study, and the numbers still held up really nicely. So we're proud of the work, and I think really just shows the testament. It's a testament to the quality of the silver sand deposit.
Good. Okay. So obviously, one of the first things I noticed was obviously your market cap currently is around 350 million or so, which obviously changes day by day. But usually what we see in this market, especially the way the market is at the moment, is you'll see a company come out with a PFS or even a feasibility study, and the NPV to market cap ratio is way off. Your people are trading, I've seen many a time, sort of 5% of their NPV, and nowhere near what the capital capex will be. And I think you're in a unique scenario, and I wanted to point this out first, is that actually in terms of funding this thing, you're, unlike other miners, or developers, you're actually not in a bad position, right? And I think that's quite crucial. So other than that, the only other, so economics look great, funding capabilities, as they say, as they are, look very achievable. I guess the main thing, can you get this thing permitted?
Yeah, that's really what we're after right now, and our core focus. And I was just down in Bolivia for the last couple of weeks, and fortunately, I came back last Friday before the failed coup attempt. But yeah, no, just great opportunity to re-engage with the team down there, and I think that's really the essence of it. Is the permitting is a function of storytelling and relationship building, and gaining trust and understanding about what we're proposing. I think really it starts from the local community side, and while Bolivia is very much a mining country, and there have been very successful large scale open pit mines that have been operating in the country, still the concept of a large scale open pit mine in a country that's much more familiar with small scale artisanal mining activities, and really that's the part of the socialization that we're doing, as part of our permitting process. And our team down there is doing a really good job communicating that message, and getting folks to understand the scenario, and that the pie that this development scenario will bring is substantially larger than what could be available through alternative means. And so that continues on. And then from the community side becomes, you get the local government, the regional government, the federal government. And over the last year, our team has put a huge amount of effort into one by one, telling the story, flipping through our development profile, our deck, talking about our issues, and explaining just what the project is, what the vision is. And we've been encouraged by some recent uptick in interest and support from certain political actors, understanding the importance of what this project will bring to the country. And so we're going to continue down this path, as we've been doing for a while, and hopefully in the not too distant future we'll have a breakthrough where we've got a signed agreement in place. But we're not there yet. It takes time. Again, we're dealing with human beings and multiple competing interests. But I can say with confidence that our team is systematically going through one by one and telling our story, and we're optimistic that we'll have a positive resolution at some point in the not too distant future.
Okay, and how does that process work in Bolivia? Is are there different permits you need to get locally, and then some with the federal level, or?
The main within our mining right at Silver Sand, we have a mining permit, but we need the environmental permit, so it's kind of a mining permit, but can't really do much with it. So really for us though, but that limits the scope to, okay, it's the environment, so it's just within the Ministry of Environment that this permit is granted. And so it's really the big piece in there is the surface access agreement with the local community. That's really the most important piece. There's, in addition to that, some baseline environmental and socioeconomic data that's not particularly difficult to put together. But I think it's that surface agreement with the local communities. That's really the key goal that we're after right now. And as I said, it's a slow process. It takes time building relationships, but that's what we're after. And I think once that agreement is in hand, the rest of the bits and pieces will be ancillary, and then that'll allow us to make our submission.
Okay, all right. Just while we're on this environmental and sort of permanent side of things, what is the environmental footprint of this mine? Obviously, it's an open pit to begin with. Can you just talk us through the mine plan a little bit and give us a sense as to how this actually looks once it's in production?
Yeah, so open pit mining profile, and then I think you look at the two most sensitive areas, are the tailings and the water. And so for us, we've gone with a dry stack tailings option. So we're going to dewater the tailings, which will allow us to recycle a huge amount of water, and then uh, dispose of the dewatered tailings in an engineered facility. And so I think that also, not only that cuts down on the water consumption considerably, it also creates a more geotechnically sound storage area for the mine tailings. And then on the water side, what we're planning as part of our PEA and now PFS is to actually build a water reservoir. And the area we're located, it gets about, I don't know, we call it 800 centimeters, a meter of rain a year, but most of that falls within just 3 months. And so you have a very wet season and then a very dry season for the majority of the year. And what happens in that wet season is most of the water, there's too much of it that falls, and the the users can't absorb it all, so it ends up in the ocean eventually. And so what we're going to do is during that boom cycle of rainwater, is we're going to build the water reservoir, capture enough water for use in our processing plant throughout the year. And importantly, we will be able to share some of that water with users during the dry season that they otherwise wouldn't have available. So it'll be an example of a project that'll actually have a net positive impact on the availability of water in the region. But so between that water reservoir, which will capture the excess rainwater, and the dry stack tailings facility, we think that from an environmental perspective, it scores highly compared to some other projects worldwide.
Okay, and in terms of the actual production profile, obviously, when you released the PEA, there was a bit of a dip. Sort of, I think it was through years sort of 5 through to 9, wasn't it? There was a bit of a dip. So, What's changed from last time compared to the PFS that you just released on the 26th?
So for the PFS, part of the work we did was created a more detailed mine schedule. And I think in that PE, as you rightly pointed out, we pulled a lot of production up forward, which is helpful. It helps the MPV, but as you said, it also creates some leaner years in the mid part of the mine plan. And so for the PFS, we kind of hit a sweet spot where we've got in the first 3 years still 15 million ounces a year of silver production, and then in years 4 till kind of the midpoint, that divot has smoothed itself out somewhat as a result of the refined mine plan. So it's actually a great scenario where we've still got that front end loaded production. We got that sub 2 year payback period on the capital that really improves the financeability of the project. And then down the road thereafter, it kind of reduces the boom bust nature of the mine plan and smooths things out in the mid part of the mine plan. So we think it's a nice, elegant product that came out of the PFS scheduling.
Good. And one of the other things that I actually really liked about this was obviously you used a $24 silver price. If you actually look at the MPV at roughly today's prices around $30, you're looking at an MPV above 1 billion, which is very impressive. But more importantly, the all-in sustaining cost, you're sitting around $10.69. How have you managed to get that so low?
No tricks. I think that's just the beauty of grade. So 105 gram per ton, diluted head grade, about 1.3, 1.4 grams per ton gold equivalent, depending on your price. That's 40 to 50% higher than what most open pit gold mines are coming in at today. Strip ratio 3.3 to 1, so very manageable. I think at the end result, that's just a function of the denominator. Is that because the grade's good, we can produce a lot of ounces from the same amount of tonnage, and then when you do the math, you got a bigger denominator. The all-in sustaining cost number, comes out nice. Of course, there's some little wins here and there, like in Bolivia. We've got a good, we've got firm quotes from a mining contractor with operations in Bolivia, and so they gave us a competitive number, and the power costs in the country are 5.5 cents US a kilowatt hour per ton. That really helps us out. And the access, the government's improving the access road to the site, and that allowed us to shrink the footprint of the camp at site and have more of the workforce busing in and out daily and spending the nights with their families. And so little wins like that certainly help with the per ton cost profile. But I think the real driver there is the fact that we get more ounces in every ton that we mine and process because of the grade, and that's really what drives the cost down more than anything.
Good. Okay. So at current prices, your actual MPV to capex ratio is above 3, really, which is phenomenal. Um, Obviously, depending on whether or not you build this yourselves or if someone would like to acquire it, does this have the scale? Obviously, it has the profitability. It has definitely has the economics, but does it have the scale of deposit yet for a major or a mid tier to come in and acquire this, or do you think it might need to be a little bit bigger?
Um, No, I think it's there. I think you look at our register with Silvercorp Metals, Pan American Silver. It's good enough for them. We got a lot of interest. It's a small industry. People talk, and so the interest that we get is, I think, is there. So I don't think it needs to get any bigger. At the end of the day, it's not just about size. It's about, like you said, capital efficiency, profitability, and the numbers that we put on the PFS really screens as the project that every company loves to have, a good, low cost, reliable cash flow producing asset that can enable a company to do a lot more things when they can count on that check coming in every month from a low cost mine. So I think it's certainly got the scale. I think on a gold equivalent basis, it's what is it, 170 something thousand ounces a year, and for the silver players, right? You look at the first 3 years, 15 million ounces of silver a year. That's like what Hecla Silver produces from their company collectively. A little shy, but close, and more than what Core Mining and First Majestic produce. So, it's got that scale to attract really anyone across the board, and so no, I think it's in a really really nice sweet spot where doesn't need $1 billion to get built, and when it is built, it'll operate at a competitive low cost.
Good. Okay. And so talk to me a little bit about sort of the free cash this thing's going to be pumping out once it's up and running.
Yeah, well, I guess I think the $10 an ounce silver all in sustaining and $30 an ounce silver where we're at today, that's a $20 margin, right? And if you did 10 million ounces, that's 200 million pre-tax free cash flow. And the first few years we'll do 15 million ounces. So you ratchet that up. So it's significant, right? It's a kind of situation where get the permit, get the financing, and just my background is I come from an accounting background. I mean, you can just see the debt and everything sort of melting away quickly and building cash on the balance sheet with that kind of a profile in this environment. So obviously we still got a lot of work to do to get there, but yeah, especially at $30 silver where we're at today, I mean the economic proposition is remarkable.
I want to go on to your other project in a moment, but before we do, I mean, what's left to be done on it? Obviously, you've got to go through some more engineering. You need to do a full bankable study, right? Is there anything else that needs to be done on this aside from permits alongside it? But does any more exploration work or metallurgy work or anything else like that need to be done on this project? What are the main work streams that you're going to be working on here over the next couple of years until this gets built?
Yeah, yeah. So I think we will need to do a little bit more geotech drilling as part of the feasibility study. I think that's known. Um, Exploration drilling, no. I mean, we got 200 million ounces of resource. We'd have to, unless it was a material, we found another silver sand, that would be something else that would necessitate a re-engineering. But at this point, if we found another 10, 50 million ounces, it would just go onto the back end of the mine plan and you discount it to today. It doesn't really change the economics all that much. So no, it doesn't need more exploration drilling, maybe a little bit more infill drilling. I think just again, depending on who finances this project, who builds the project, there's different degrees of risk tolerance in the geological model, and some may say we've done enough drilling. Others might want to see a touch more, but it wouldn't be a significant amount. So, and on the metallurgical side, yeah, I mean you can do endless amounts of metallurgical test work. So at some point you got to say enough is enough. But so I'd say between the geotech work, maybe a touch more infilling, and some additional metallurgical test work, those would be the big final technical parameters that would need to be ticked off as part of the next phase of technical evaluation. But nothing, those things are not material cost centers. I think they can be done, fairly swiftly. So I'd say we're getting close, right? I think it's exciting to be where we're at currently, and that's just on the Silver Sand project. And then we'll talk about Kangas in a sec. But yeah, no, I think we're in pretty good shape.
Good. Well, I think we should talk about Kangas because I like I said, it's quite rare to see. I know I was saying it's quite rare to see a company of your valuation with a capex like that's very financeable. But it's also quite rare to see junior sort of development companies with a couple of projects that look as though they all deserve to be potentially built. And Kangas, I mean, we'll talk about the economics and how great they are on Silver Sand, but obviously Kangas, from what I understand, you're looking to do a PEA on that, and that's in theory the bigger project. So I wouldn't mind sort of understanding how that's going to come together.
Yeah, no, that's totally fair. And so Silver Sand, just to orient you, is a 50 million ton deposit. Kangas, the resource we put out, it's 250 million tons, so 5 times the size. And so it doesn't quite scale 1 to 1, but if you upped the Silver Sand project with $350 million of capital by a factor of 5, I mean, you start to get into a situation where, yeah, you can really maximize the NPV, but it becomes a much tougher proposition to finance. And so what we've been working on is looking at alternative development scenarios within that 250 million tons. And the nice thing about Kangas is that in the top 200 meters, there's the silver zone. So there's about 150 million tons in that silver zone. But within that 150 million tons, there's a much higher grade near surface lens of continuous mineralization, about 50 to 60 million tons. So much more in the size of a silver sand. And so I think that's really the scenario that we're going to target. Having these sort of financeable, buildable profile at silver sand has been a strength of our company, and so we're looking to hopefully replicate that with the Kangas PEA study that we're targeting for September of this year. Now we've still got some work to do. We've been conducting some metallurgical test studies over the last several months, and we're going to actually we've pledged to cut those off at the end of June, which is just in a few days. So we're going to stick to that, and then kind of see what the data says from the metallurgical test work, and sort of take that and work it into a development scenario. Now, the grade at Kangas, even in that higher grade lens, we're not going to get where silver sand is. I mean, that's just it's so hard to replicate a blockbuster like that again. But based on some of the early reads that we're seeing, we still should be able to put something out that's competitive and compelling. But we still got a little bit more data that we want to get in, and before we can definitively say that. But so far what we've seen is encouraging, and we're excited to put that PEA study out in just a couple of months here.
Good. Yeah, I was actually going to ask you about the grade in the high grade part and if it was similar, but you've answered that. But in terms of the way you're looking at this PEA, if you can answer it, are you looking at releasing just a standalone on the 50, 60 million tons that you were talking about there? Or are you thinking more around starter pit and then sort of modular type plant that you can then build up and do in different phases or stages? How could we expect to see this?
Both. You look at one of the what we found is that in the 43101, you can put forward your main scenario, which will be the higher grade lens, and in one of the I think it's chapter 26, we can present an alternative scenario. So that's where we'll show the full, if you wanted to unconstrain maximize NPV, take the super pit, that scenario we'll put in there as well for reference, and then that'll bookend the Kangas project nicely, depending on what metal price environment you're in, and who you are, what your balance sheet is, and your appetite for deploying capital. And that's the beauty of this: is the smaller scale project, it preserves the optionality of the bigger scenario down the road. So we'll show both, but we will focus on the higher grade lens near surface for the main part of the PEA.
Good. Okay. So you're in it's a good position really, because you've got two projects where there's potentially a route for yourself to build and finance, but then even with Kangas, you've got another option, which I guess would be quite attractive to people with bigger pockets, right? And you've already got shareholders in there that potentially could do that. So unlike a lot of other junior mining companies where, like I was saying earlier, the financing of this thing is going to be impossible, you don't have that problem. So other companies usually are in this position where they sort of need a JV partner or they need to be bought out, and it's sort of this waiting game, and sometimes you're waiting forever. Whereas at least you're not stuck in that position. Your future is yours to create, in essence. Just talk me through the next sort of 6 to 12 months. Obviously, you mentioned the PEA is coming out. What else should we be expecting? You do have another project that we haven't even touched on yet as well. Is that Silver Strike, isn't it? So any work going on there? What can we expect to see?
Yeah. Silver Strike, no, it's still parked on the shelf. There's still a good amount of geological prospectivity within that project, but just we've got limited dollars, limited bandwidth, and so we've made the strategic decision to focus on Silver Sand and Kangas. So don't expect anything at Silver Strike in the not in the foreseeable future. I think unless the environment changes, where our shareholders will get rewarded for the drilling activity that we're doing, we're going to just keep it parked as is. I think our now that we've got the pre-feasibility study out for Silver Sand, in my view, and investors' view, it's out, but internally, right, they've got 45 days to put together the report on CDAR. So our team will continue to be working diligently to get that out on time. So that'll be a focus here. And then in parallel, they're going to be working on, and then shifting to Kangas all in as part of that PEA study that we're hoping to release in September. And so I think, from an engineering perspective, our bandwidth is going to shift a little bit over the next couple of months from Silver Sand to Kangas. But in parallel to that, our in-country team is going to continue pressing forward with the permitting activities, continuing to engage with the local communities and the government to push these forward. That's going to at both projects continue full speed ahead. And then I think after September, when we've got our Kangas PEA study out, we'll be in a spot where we'll reflect on our two projects and think about what's the most logical step forward, what makes the best sense for our shareholders. Does it make sense for us to go into full feasibility study mode at Silver Sand and do all that other work that I described earlier at Kangas? Does it make sense to go to a pre-feasibility? So I think all these questions will be in a much better position to answer at the end of September once we've released the Kangas PEA. But for the time being, still lots on our plate. Let's get that study out, and then we'll be able to talk to next steps with a little bit more clarity.
Good. All right. Very busy summer for your engineers, by the sounds of it. No rest for them. Andrew, thank you very much for the update.
All right, Peter. Always a pleasure.